Well, it's that time again. It is 1 o'clock in the post-meridian Eastern time. It's Market Takes. I'm Dion Rabouin, walking you through all things this week, the biggest economic reports, the things that are going to matter to the market, the economy, and to everyone out there who is watching these. And I think we're at a very precarious time right now with what's going on in the economy and with the markets. And so, I know you could have been anywhere in the world and you're here with me. I appreciate that. Let's get into it. Look, today on Market Takes, this is our live stream for the Wall Street Journal. I'm going to be walking you through this week's big housing reports. And we've got a bunch of data coming out in the housing market. Some of it forward-looking that I think is some of the most interesting and important. We're going to dive into that. We're also going to take a look back and kind of examine where we are, how we got there, and the current state of the housing market, because things have changed quite a bit from where we were just a month or two ago. So look, let's dive right in. We're going to dig into all that. And I want to talk to you about first this pending home sales report that we got this morning. We've got the FHFA, Federal Housing Finance Agency, and the Case-Shiller Home Price Index coming out this week. We've also got construction spending and reports on a number of other things. Also, our sneaky economic report of the week. I'm going to talk to you about why that is and why it matters. So look, first let's talk about this pending home sales report that we got today. I think that one was big, and it's going to tell us a lot about the economy and, generally speaking, what we can expect to see moving forward in the market. But before I dive all the way into that, let's hit rewind a little bit and talk about the signs that we're seeing of this cooling housing market. So I talked a little bit about this in my last report that I did earlier this month about why the housing market is actually starting to cool down. If you guys remember, I did a report or I did a video in February saying that, economists are saying the housing market's finally going to cool down. That could be a nice sign for those of you buyers who are looking to finally, buy a property, purchase your first home. The market's supposed to cool down, only supposed to rise 3 to 5% this year. Well, to start the year, that didn't happen. I talked about some of the reasons why that hasn't happened, as well as some of the signs we're seeing that it now is starting to flow into the economy. So I want to talk through a little bit of that right now, just those signs that we are seeing and how they've led into the reports that we got today. First of all, sales of existing homes fell in May to the lowest since July 2020. And they've been lower year over year every month since August 2021. So we've seen this number decline consistently over the last 6 months. And we've seen it decline year over year from that 2021 pace, which was just crazy, every month since August of 2021. So I talked to the National Association of Realtors last week to kind of say, like, okay, what's really going on? And the numbers are actually worse than I had kind of anticipated. We're seeing year-over-year sales down 8.6% in May. That was the largest decrease since June 2020. Now, if you just stop right there for a quick moment, you remember June 2020, we were still in the pandemic. You still really couldn't go tour houses. You couldn't, it was really hard to get a house under contract. We were also still kind of dealing with the throes of the recession, the shortest recession on record. So June 2020 is a particularly interesting analog when we're comparing, anything to that, because that's a very special month. After that month, housing sales really started to pick up and take back off, but that was the month where you really couldn't compare it to anything. May and June of 2020 were just incredibly low because that was part of the government shutdowns, going to see a house. You really couldn't do that because of the COVID-19 restrictions. So again, we're at the lowest since then. Also, you had the year-over-year sales down 8.6%. That was largest, like I said, since June, which was down 10.2%. Prior to the start of the pandemic in 2020, this is the lowest since we've seen since December 2018, right? Year-over-year sales of homes under $500,000 are down 12.5%, according to the National Association of Realtors. So overall sales are declining, but you're still seeing a broad pickup in terms of the sales price of very expensive homes. Those homes are still selling. Homes $500,000 plus are still selling, and they're still increasing the price. Homes under $500,000, the bottom has really fallen out, And the lower price the home actually, the less the sales are. And that's largely because these interest rates are just completely pricing people on the lower end of the home buying spectrum out of the market. Coming into this month, pending home sales, which is the report that we got this morning, had declined for 6 consecutive months and were at the slowest pace in nearly a decade. So we're going to talk more about that in just a minute. But remember, pending home sales were on a real decline, existing home sales on a significant decline. And we had a report from Redfin that showed us that almost 1 in 5 home sellers had lowered their asking price in May. That was the largest or the highest number since October 2019. So you've got these consistent themes going on, especially in the lower price portion of the housing market, homes under $500,000, where they're not selling. Home sellers are cutting their prices. Homes are staying on the market longer, and we're seeing that. Redfin has been doing a really great job of putting out new reports tracking the kind of turnaround that we're seeing in the housing market. And we've seen another report from Redfin showing that more than 40%, that's 2 in 5 home buyers or home sellers, in hot markets like Salt Lake City, Boise, Sacramento, more than 40% of those people were reducing the price that they had listed their homes at, so cutting the prices. Redfin also found that home buying demand had fallen to its lowest in more than 2 years. So that means home tours, offers on homes, and people reaching out to get the help of real estate agents to buy a home had seen its largest annual decrease since 2020. This again goes back to Redfin is tracking these things in June in kind of real time. And for the week ending June 23rd, that was last week on Thursday, sales had decreased at this rapid rate in large part because mortgage rates had risen to 5.81%. We're almost hitting 6% mortgage rates. That's an important number. I want to get into that a little bit later, but the mortgage payment on the median asking price home in the US increased to $2,500 from $1,700 a year ago. And in fact, just at the beginning of the year, since the beginning of the year, the National Association of Realtors expects that or projects that home price, the average price that you're paying for a median priced home, has risen by $800. That's significant. Again, if you were able to afford to pay $2,000 a month, $1,900, $1,800 a month, you were comfortably above that median before. Now you're well below it. And so we're pricing millions of people out of the market as these rates go higher. So that, I think, takes me into the pending home sales report that we got this morning that was a huge, big, massive surprise, really caught a lot of people off guard, myself included. Pending home sales ended that 6-month decline. Actually rose not by a lot, but economists were expecting a pretty big drop of 2.5% according to FactSet, and we saw an increase on pending home sales of 0.7%. Here's why that's important. Pending home sales is a forward-looking indicator. It means, it's of the housing market data that we have. It's the most forward-looking because it looks at homes that haven't finished selling, as in a lot of folks agree that they're going to buy a house, the seller agrees to sell it, then you get under contract, you go through your inspection, you've got all that goes on for a month or two, depending on where you are in the country, and then the home actually gets sold. So this is an accounting for all those homes that just, we're under contract. I've agreed to sell it as the seller, you've agreed to buy it as the buyer, but we've still got some negotiating to do, we've still got some inspections to get through. Like I said, economists had predicted a decline of 2.5% after a 4% decline in April, and we saw actually an increase of 0.7%. Some economists were predicting a decline of as much as 4% on those pending home sales. So this beat was a real shocker and suggests that maybe the housing market isn't rolling over. Maybe we're not turning from that seller's market to that buyer's market because you saw that change happen, and just as quickly as it happened, it snapped back because those big corporations, Blackstone, BlackRock, KKR, Carlyle Group, they're out here buying homes, but also you've got people that just, individual investors that have a lot of money available, and they see that the home rates, the home selling market is turning, and now they've got the opportunity to go out and buy some things that maybe they wouldn't have had before. Now that homes are staying on the market a little longer, they can make a deal, they can offer a kind of below asking price offer, and that home seller is going to consider it where they wouldn't have 3 or 4 months ago. So that's big and something to watch. We still are, though, moving lower on these numbers. pending home sales was down 13.6% year over year. So still, we are declining pretty significantly from that pace that we were at in 2021. Lawrence Yun, he is the chief economist for the National Association of Realtors. He said in the report this morning, despite the small gain in pending home sales from the prior month, the housing market is clearly undergoing a transition. That transition very clearly happening. Like I said, according to Lawrence Yun's calculations, $800 increase since the start of the year in the median single family home right here in the U.S. This is, again, I think it's worth watching for a number of reasons, but we are also going to get into some more data that we've got coming out this week. But look out for next month's existing home sales. I think that's going to be big. Where is the housing market going? And this is important not just if you're a home buyer or home seller, but for the overall pace of the economy. Home sales and home prices make up a big piece of that CPI basket that the Federal Reserve watches, or that PCE basket that the Federal Reserve watches. If they continue to sky higher, that puts more pressure on the Federal Reserve to do more. The more they do, the more they slow the economy. The more the economy slows, the more likely we are to head into a recession. So this is worth watching, even if you're not thinking about buying a home. Look, the bottom line is, don't sleep. This pending home sales report tells us something's changing. Things are changing in the market. Rates did come down a little bit in May as, more investors moved into that treasury market. We saw yields on the 10-year benchmark treasury note fall down back below that 3% level, which is a very important level. Ever since then, in early mid-May, they've really spiked up and come back higher. Right now, today, I think we're sitting at about 3.18% on the 10-year. So that again means mortgage rates dipped a little bit, but then they went right back up, and now we are approaching 6%. So looking forward, we've got the FHFA, Federal Housing Finance Agency Mortgage or Housing Market Index, and the Case-Shiller 20-City Home Price Index for April. Those are coming out on Tuesday. Those are important because, look, we get a deep dive into what happened in April. The Case-Shiller report does a deep dive into 20 different cities, 20 different major metropolitan areas that are driving the overall housing market, and it breaks out what's going on in each one of those. If you dig into that report, if you've got the time, it's really helpful in terms of just breaking out what trends are happening, what's going up, what's going down, and what's consistently moving in a certain direction. The FHFA report is the nation's only public, freely available house price index, measures changes in single-family homes from all 50 states and over 400 American cities. So if you're looking for a deep dive on everything happening throughout the country, you want that FHFA report. If you're looking for 20 major metropolitan areas that are really driving the market right now, you want that Case-Shiller report. And both of those are coming out Tuesday, 9 a.m. They're gonna tell us what happened in April. April was the first month where mortgage rates really started getting up past that 4% to 4.5%, approaching that 5%, and now as we approach 6% here in June, April was when that change in the housing market started to happen from historically low, still low interest rates to now getting back to that median to even high level that we see. We also get construction spending for May. That's on Friday. That's coming out at 10 a.m. That's generally held up. Overall construction spending has held up pretty well, but it is clearly slowing down. When you look at a chart of that construction spending number year over year and month over month, you see it just starting to tick down. Still positive overall, hasn't turned over like we've seen existing home sales, new home sales, pending home sales in the real estate market. So will be important to watch that construction spending report that we get for May, Friday at 10 a.m. That could also be a potential recession indicator. We know that when construction spending or when the economy hits a snag, construction spending really slows down significantly and considerably. So watch out for that. The residential construction sector up 1.3% in April. Does that continue, and do we get another solid, strong report? My sneaky but not so sneaky report for you to watch this week, PCE, personal consumption expenditures. It is the Fed's favorite report on inflation. Normally, we've done an entire live stream market take special on PCE. We didn't do that this week, and I thought it was a less important report because the Fed already said when that CPI report came out earlier this month that changed their thinking. They raised rates by 75 basis points. That's 3 times the rate they normally raise by. The Fed already said, hey, look, we were watching CPI. That report moved us and caused us to change our direction of thinking. Well, they can't now, when PCE comes out, say, oh, well, now PCE is different. That changes our thinking entirely. Still important because PCE and CPI are calculated differently. PCE is when it looks at inflation, it looks at substitutions, as in if you were buying steak, now you're buying hamburger. CPI just says, okay, you're buying beef. PCE says, oh, well, you went from steak to hamburger. That's an interesting change you made. You probably did that because the price of steak is rising so much and you're making changes. Also, a number of different indicators in there, and the core rate on PCE has declined pretty significantly. So the Fed could see themselves in a better position if that report continues to show it's cooling down, which CPI did not show. That's going to give them a little bit of comfort. So certainly watch that. But the Fed already said this CPI report that came out earlier this month changed our thinking, and we're going with that. So not as big a deal as it normally would be. So listen, that is going to about do it for us here on Market Takes. Thank you again for joining me, Dion Rabouin, reporter for the Wall Street Journal. Look, our takeaways for what we're out to look for this week. Housing is clearly in a tough spot, but that pending home sales report that we got this morning at 10 a.m. showed us that maybe the market is starting to turn. Maybe investors, maybe home buyers, a little glimmer of optimism, are starting to rethink the market, or were at least in May, and they're back in, but we'll need to see more reports on those data. The existing home sales report for May was bad. What's it going to look like for June going forward? And is the market really turning over, or are these enterprising and auspicious investors saying, hey, you know what, this is a buying opportunity, let me get back in there? This week's housing data is going to tell us some things about where we've come and where we are as well. So be sure and look out for all those: construction spending, Case-Shiller and the FHFA report on Tuesday, construction spending on Friday, and of course the not so sneaky important report, the personal consumption expenditures report. That's coming out later this week. Check that out as well. Thank you for joining me here on Market Takes. I've been Dion Rabouin for the Wall Street Journal. Hope to see you back here. We'll be doing it at the same bat time, same bat channel. We're off for the 4th of July next week, but stick with us. We're going to keep going with Market Takes. I appreciate you guys tuning in, and we'll see you next time.